right, let's move on. And the other topic that we are going to be focusing on today is a pivotal choice for first time home buyers. Now, should you secure your home loan through a traditional bank or opt for a non banking financial company, which is NBFC? Now, banks are known for their good interest rates, a stringent eligibility criteria, while NBFCs offer flexibility and faster processing times. But which is the right fit for your unique financial situation? Now, to provide clarity, we are joined by two experts. Now, a seasoned professional who understands the nuances of NBFCs, a certified financial planner who will shed light on the broader financial implications on your choice. So, let's delve into the pros and cons and help you make an informed decisions. I have with me Ratan Chaudhary, Business Head, Paisa Bazaar; Shweta Rajani, Head, Mutual Fund, Amrati Wealth. Hi, and welcome to the show, both of you. Ratan, let me just come to you first because, let's just help our viewers understand, how our NBFC is different from a traditional bank, in terms of offerings for home loans.
See, as far as banks are concerned, as rightly told by you, the rate of interest is lower, and traditional banks, the process might take a little longer compared to the NBFCs. So when it comes to NBFC, and what are the advantages are like, they're more flexible on rate of interest. They are competitive, might not be as competitive as banks, but they are competitive in these days. And for the new home buyers and the first time buyers that you're talking about, what is also important is that the eligibility criterion. So most of the time, the kind of quantum of loan that they are looking for, might be provided by an NBFC or an HFC as compared to a bank. Now, the traditional data also shows that the NTC, new to credit customers, who might also fall in this range of first time buyers, 42% of the loans are being done by NBFCs these days. Uh, and new to credit customers are 50% in the home loan buying category. So if you combine these, definitely the inclination should be more towards NBFC for a first time buyer uh, than a traditional bank or a PSB.
Ratan, one more question on the regulatory angle that I want to understand from you. Now, with evolving regulations, on NBFCs, how are NBFCs ensuring transparency, protecting borrowers' interest over here? What measures are in place to handle defaults or financial hardships, which are faced by borrowers?
See, as far as rules and regulations are concerned, earlier the NBFCs were, the HFCs were regulated by NHB, and 2019 onwards they are, being governed by RBI. They're regulated by RBI. So as far as rules and regulations concerned, they follow most of the guidelines, which a traditional bank would be following. How do they safeguard, a borrower's interest? As far as see, when a person is availing a loan, okay, uh, as far as due diligence on the property is concerned, he shows that the although these banks are flexible, but their due diligence is at par with any of the banks, any of the traditional banks or the PSBs. So the customers interest is equally safeguarded whether or not he's availing a loan from an NBFC or a traditional bank.
Shweta, let's do a comparative analysis over here. And from a financial planning perspective, Shweta, how should a first-time buyer decide between a bank and an NBFC for a home loan? We are talking about long-term financial implications. So now, what long-term financial implications should be considered when choosing between the two of them?
Sure. So Kavita, two to three things here that one can keep in mind, keeping your long-term financial plan also in mind. First and foremost is the rate of interest that you would end up paying, between a bank and an NBFC. Now, just to give you some idea that if you're going with a bank, the interest rate on your home loan may turn out to be somewhere around 8.75%. Whereas if you're going to an NBFC, then you'll end up paying it ranges anywhere between 8.5 to 10. So clearly a larger outflow is not so good from an interest rate standpoint, from a long-term standpoint, because what happens is in your earlier years, you end up paying a higher interest component. So that is one thing that you should keep in mind. Second is, what are your terms and conditions as far as foreclosure is concerned? If you want to early close your loan, what would be the fees that you would end up paying? Because a lot of the times it so happens that you would end up taking a 20-25-year-old loan, but as you grow, as you have more capability to pay up your EMIs, have bonuses coming in, you would want to foreclose it earlier. So doing this math in terms of what are your fees and what would make sense for you, whether you foreclose your loan or you invest that in a mutual fund and see how that is growing, or is the second math that one needs to keep in mind when you are combining a goal of purchasing a house with your long-term financial plan of for wealth creation. So these are, very quickly two things that one should consider.
Uh, Shweta, a credit score consideration. Now, this plays a major role, in getting a good interest rate. How does one credit scores influence a decision to approach a bank versus an NBFC? And are there strategies to improve credit worthiness before applying for a home loan?
Definitely. So, how do you improve your credit worthiness? And that will help you make your choice because clearly banks are far more stringent as compared to an NBFC. And, they would look at what is your type of employment. Are you salaried? Are you self-employed? Second, what is the stability of your income coming in? That matters, and civil score or credit worthiness. So, few things, very simple, basic things that you can do, which ensures you're improving that credit score is have a limited usage of credit card, and if you have credit cards, ensure that you make your payments on timely basis. So that is definitely one thing that would improve your score. The amount of loans, how many times have you taken a loan, and what has been your repayment capability for that is another very basic thing, but it matters. What type of loan have you taken? These are, two, three things that will help you improve your score. So if you're planning to buy a house in the next 2-3 years, keep a watch of it, keep a watch of your spending pattern. It tells you, these are small things which matter in terms of improving your score.
Ratan, see, NBFCs are known for quicker loan processing. I want to understand from you what factors contribute to this efficiency, and also how do NBFCs assess the credit worthiness, particularly for applicants with a limited credit history?
So there's a couple of things. First thing that I'll like to mention is that their policies are less stringent. What does that mean? Like you know they don't mandate that suppose a person is purchasing a property in his own or in her own name, then a single borrower just might qualify to take a loan. That might not be the norm with few of the banks where you might need a co-applicant, you might need a woman borrower as a co-applicant. So these are the things where maybe availing a loan from an NBFC uh, helps. How do they actually they are very very supportive as far as a borrower is concerned. Normally they don't take a call, so unlike the notion it's like if you're availing a loan from an NBFC, a person with a poor credit history or who might not be eligible for a loan, or who might be buying a property where the title is not clear, it might not go through. Where they normally take a call is on the quantum of the loan, on faster processing. It's like because the type of vendors that they have empaneled, they will be working on a very very fast turnaround time. So these are the things where they actually score over a traditional bank. uh, and these are the reasons where they score over a traditional bank as far as faster processing is concerned, and being less stringent is being concerned.
All right, Shweta. Now, what risks should borrowers be aware, of when they're opting for an NBFC, and how can they actually mitigate them? I'm talking about the risk management over here. Also, in the current economic climate, how stable do you think NBFCs are compared to banks?
Today, if you go to see, if you compare the kind of regulations that NBFCs also have to follow, they're pretty much very similar to, I would say, banking, regulations that they have to follow. The audits that RBI conducts on them is also as I'd say, stringent compared to what it was a few years back. We've been seeing the NPAs have been reducing for quite a good number of NBFCs. So taking all this into consideration, I don't see too much of a risk when you are going with an NBFC. But yeah, like I said, some things that you have to check as a borrower is how are the fundamentals or the financials of the NBFC looking? What is the capital adequacy ratio? What has been the NPA, the gross NPA, net NPA? How smooth are their processes as far as getting into the home loan, getting out of your or closing your home loans are concerned? Are there any hidden costs which are not there? Reading the fine print, these are a few things that one should keep in mind and can help you mitigate a lot of your risks or shocks that you may get later on. So yeah, quick 3 4 things that one should keep in mind.
All right, we can really go on discussing this topic, but then my time is up. But in a nutshell, choosing between a bank and an NBFC for your home loan is a decision that hinges on various factors: your financial health, credit history, urgency, and long-term financial goals. Now, banks may offer low interest rate stability, but NBFC provide flexibility and quicker access to funds, especially for those with non-traditional income sources. So, as always, assess your personal financial situation, consult with professionals, and make an informed choice that aligns with your home ownership dreams. Ratan, thank you so much for being on the show and helping our viewers with this very important decision and a financial goal of their life. Thank you so much. All right, but then we continue and we have Shweta who will be now answering our viewers' live financial portfolio queries. And Shweta, first in line, I will be taking Raman's question. I think you have the query with you as well. He needs 3 to 4 crores corporates in almost 15 years. He's doing SIP in Franklin, India, feeder Franklin, US, 10,000 amount over there. Parag Parek Flexi Cap, 15,000, SBI Healthcare. Opportunity almost 7.5 thousand, and ICICI Pro Thematic Advantage Fund. He also wants to know your recommendation or opinion on HSBC Value Fund. I think he's doing an SIP 15,000 already in it. Nippon Multicap 10,000 again, Tata Digital Fund 7.5, and UTI Large and Mid Cap 15,000. So that's the fund selection.
Sure. Ratan, I went through your portfolio. Now, in terms of the goal that you have, 4 crores with the amount of SIP you're doing, it's something that can be achieved very well. So, no changes required there. But of course, if you can do a step up to your SIP, nothing like it. Coming to your scheme selection, I just have 2 observations here. One, you have an exposure to the Franklin US feeder. Now, given the situation where we are in, going forward for the next few years, India looks better placed compared to a lot of global markets, whether it is, economic growth. We are, India as a country is expected to be among the fastest growing, earnings, valuations, all that. If you look, I suggest being in a domestic equity fund for you that may give you a better return. Second is you have quite a few sector funds in your portfolio. Now, like, I've been always saying sector fund needs a lot more involvement by the investor, understanding these sectors and timing it very well, which does not happen with most of the investors. So I'd suggest you to stop your SIPs here. Third thing you asked on the HSBC Value Fund. Now, see, value as a style of investing, there are 2 categories which have similar style: value or contra. In in looking at the historical record between value contra has been a better category than value, even though both of them have a similar style. So I suggest you to stop your SIP there too. You can instead go for an SBI contra fund in the portfolio. Few other funds that you can add is a Kotak Emerging, ICICI Pru Focus Equity, and an Invesco Small Cap Fund.
All right, Shweta, let's move on and let's take Deepak's question. And he wants you to recommend or guide him in terms of asset allocation for his future. And okay, so is it good to have mutual fund of the same AMC or not, So he's given an example, maybe he has these funds, HDFC Nifty 50 index, and he's got a HDFC gold fund also. I'm just assuming because he doesn't want the transaction to be reflected in the bank account. Okay, I don't know how will you answer this question. How can the transaction not reflect in his bank account?
Perfect. So, Deepak, I'm just going to split it up into two, three parts for you. Now, in terms of your asset allocation, if you have a longer term horizon, which means if you're looking at holding periods, which could be more than 10 years plus, we've seen, and you are willing to take a little risk on the portfolio, anywhere between a 70 to 80% equity works in that case. However, if you have, let's say, a 5 year kind of a horizon, then we've seen investors, also maintaining a 65, 70% equity in the portfolio, and that helps you, get a good risk-adjusted return on the portfolio. Now, second, honestly, if you ask me, I don't see there to be any harm if you have transactions in your bank account. If once in a while you are balancing or rebalancing your portfolio, so to have those 1, 2 entries, but definitely it's not a good idea to have all your eggs in one basket. So I don't suggest you to have more than 25% allocation to a single fund house, however large the fund house is, 25, 30 max. Because even if these are different asset classes, you may have an equity fund, gold fund, a commodity based fund, but still have a AMC level diversification, because you never know what hits a particular AMC. It could be regulatory risk, it could be anything. So therefore, uh, you know, uh, and what also happens is, see, it's not like you're trading into a mutual fund portfolio. When you have a mutual fund portfolio, at best, you'll rebalance it once in a year. So once in a year, having a transaction is absolutely fine. And therefore, just my suggestion to you, if you're constructing a portfolio, you can go in for something like a quant large HDFC focus, Canara Robeco multi-cap, DSP small cap. These are few funds you can consider. Gold, you mentioned. If you need it for consumption purpose, having a 5-10% gold allocation is not bad. You can do it through any gold ETF.
All right. I think with that, it's time up on this particular for this particular segment. Also, Shweta, thank you so much for being on the show and helping our viewers with every aspect of their financial planning today. Thank you. All right. On that note, time to sign off. But I'm going to leave you with our WhatsApp number and email ID. Keep sending us your questions so that we can do your life financial planning on the show. Thank you so much for watching. Goodbye.